I want to talk to you a little bit about investing.
Sure.
There's a little bit of I've heard you say a couple of times now. I think we've had a couple of meetings with Vanguard where you call you're a big proponent in Vanguarding, setting and forget it, put it in the VOO or the S&P 500,
That's right.
and forget it.
That's right.
But you own a hedge fund, Lee. What's up with that?
Yeah, it's awesome. So I'd say,
how do you go from passive investing to owning a hedge fund? How do you link those two?
Yeah, look, we all have our dichotomies, right? So I would say, I'll give you my thesis on Vanguard, especially to the younger guys that are making money. All right, do not invest. Okay, so let me say it this way: the number one mistake that young people with money make is they don't invest. All right, they spend the money or they waste the money in something foolish. All right, I've seen it time and time again. You work too hard to make money. All right, and your job once you make it is to preserve it. It's got to beat inflation, and it's got to be something that accrues to your benefit tomorrow, whenever that tomorrow is. All right, whatever you're saving for a home, saving for a car, saving for your retirement, saving for starting a family. That money that you've worked so hard to make. Now you're one of our successful traders. You've made it. You have a responsibility to your future self to do the right thing with the money that you made. And that means do not invest in your friend's idea. Period. Full stop. The number one way you're going to lose your money is investing in your friend's idea. All right. Do not give it to a high fee manager. All right. And now let's talk about the elephant in the room, my PA, right? I'm studying the markets. I watch trading every single day. No one knows more about what's going on really than me. I know exactly. I can run my money myself, right? And you can, all right? You're just over the long term of your career not going to beat the market. Period, full stop. And you are going to introduce an external level of stress and anxiety. And when the trading, those 5 days that you're talking about, those 20 trades when you're talking about, when the trading is at its absolute best and you should be absolutely locked in and focused on trading, you're going to be thinking about your PA. All right. And it is not where any of your cycles should be. All right. So what I do, and I eat my own cooking here, all right, is I dollar cost average in over my entire career to the S&P 500. We can sit here and have a debate about the S&P 500 versus total stock market versus international and all that stuff. But the point is a well-diversified basket. We're talking 500 stocks across 11 industries with, too high a concentration in Mag 7. Who cares? All right.
Yeah.
Will serve you very well in the long term. You will sleep well at night. You will not worry when there's a tweet, causes the market go down 20%. Doesn't matter when you're invested for the long term. It doesn't matter what happens in April of 24 or March of 20, or April 25, excuse me, or March of 20 or fall of 08. It doesn't matter. In those moments, you have a job to do. And that's to be a trader. And that is to absolutely spend all your mind that you can allocate to risk on trading. That's where you're going to make the most money. Now, do you agree with that?
I completely agree with that.
Right. The PA is a headwind to that.
So I will say...
PA, personal account.
Yeah. I definitely, first of all, and just in terms of investing, like, I actually have to say this because I didn't even know, like you just said that, you've seen people just like waste their money time and time again. I've seen it a couple of times, but I will say that I did, I just read this great book called The Psychology of Money. It's a sequel to the psychology. I'm sorry. It's The Psychology of Spending Money, maybe, by Morgan Housel.
Okay.
Something like that. Or like The Art of Spending Money. That's what it is. The Art of Spending Money. And one of the things he talks about is because people say like, well, investing money is basically just deferring your use of that money. And, like if I want to use my money now and I'm in my 20s or my whatever like that, not when I'm 80 years old, like that's not, I want to maximize the use of it. And one of the things he says, which I think is Morgan Housel, I think is his name.
Mhm.
He says that that's the wrong way to look at it. Like what I'm investing in is independence and it's working for me. I'm buying it right now.
That's right.
And that's a really interesting way to think about, that's how I think about investing. That's what's most important. That's what to me wealth is being independent. It's not about flashy car or anything like that. It's about independence. That's how nobody could tell me what I can and cannot do.